Okay, welcome everyone. Good morning. We'll start our lesson 4. Today lesson will go through LO4. As you know me, my name is Anjum Satar. If you have any question, drop me email anjum@ukversity.co.uk. Let's please. So LO4, which is about prepare budget for planning, control, decision making using spreadsheet. Okay, so first of all, let's think about budget. What is meant by budget? Budget is a financial plan where we are, where we want to. Normally, the plan is all about where you are, where you want to go, what you want to do in future. So budget is a financial plan. So if you don't have a budget, it means you don't have the setness. Morning,
Good morning.
good morning. How are you keeping? You okay?
Yeah, I'm okay.
Okay, great. So any question before starting?
No.
We'll start there. Okay, so we during our previous lesson we discussed about financial statement. We discussed how many types of financial statement we prepare. We said four. We said income statement, balance sheet, cash flow, and shareholder statement. These were the four statements. We discussed about qualities of financial statement. We discussed about the principle and the rules for the accounting. We discussed about double entry bookkeeping. We discuss accrual basis. These are the concept, matching concept. All the transactions should be recorded. Doesn't matter you see the cash or not. Then we discuss about last lesson ratios. We discuss about financial ratios, and we went through four types of ratios: profitability, liquidity, use of resources, and gearing ratio. So then we also discuss about management accounting and financial accounting. What is the difference between them? We said internal and external, and all these financial statement is compulsory to prepare under the financial accounting after every 12 months. So today we'll focus on budget. Budget is very crucial element which come under the management accounting. Okay, when we budget is a plan, financial plan and control work together. Budget also help you to control as well because you can look around the budgeted figures and the actual figures, what you budget for things, what you actually spend. The difference will be your variance. So will be our discussion and we'll do our discussion on variance. Variance is the difference between budgeted and actual. Okay, decision making. Decision making means selecting best options. So you have a budget within, you have information, and you can decide which project is a better for you, for your organization, within a budget, within a time, within a quality of it. So that's the key, which we'll discuss. So indicative content, what we'll cover, we'll discuss about budget is a management accounting tool. We'll discuss about reasons for budgets. We'll discuss about types of budget. We'll discuss about how we can prepare the budget and how we can use the spreadsheet to prepare. We can, of course, we can create graph. We can present, the budget into different bar chart, line graph, and any graph really you want to. We can use a lot of formulas, especially in Excel. You can use it to present, these facts and figures. Let's move to the next. Okay, so what is the budget? Budget basically is a financial plan for a defined period. So number of years that is known as greatly enhance the success of the financial undertaking. To put simple, the budget plan for future saving and spending as well as the planned income and expenditure. So budget may be carried out by individual or the company's estimate. So budget is estimate for future income and expenses, which we can say we can estimate, we can project it. Okay, different type of budget: forecasting budget, performance budget, or cash budget. Okay, then please, you've been given the video. It's good to watch. When you click that, you can watch it. Yes. So what is the budget? Budget is the financial plan for future. It's consists of revenue, which is means sale. It can be cost. It can be profit for a business. Okay. Then please, budget are as the key management tools. Budget are the crucial management accounting tools that provide the roadmap. This is a set map. Formalize the statement of the budget financial and operational goals. We can look around. The budget is a proactive process that help organization to plan, control, and coordinate the resources. We have a limited resources, but we want to make sure use in effectively ways to achieve the desired objective in our organization, which we want to. Budget allow organization to set the specific target, identify the areas where need to be cut the costs, or to invest more resources, like different departments. We can look around in our organization or different products. Okay, so we can look around the see and about the capital expenditures and the revenue expenditures. Capital expenditures mean buying asset or extension of asset. Like your building is a capital. If you buy a building, is a capital. If you buy a car, if you buy a plant, that's your capital expenditure, because these are known as assets. Any money you spend on asset which we can use many years and give the benefit to the business, that's called capital expenditure. Identify the most profitable areas in their business. Okay, secondly, the budget help the organization monitor the performance. Regular, we can compare the budgeted and actual, and we can find the variance, and we can take the corrective action. Okay, so it's help organization to track and achieve their objective. Third, the budget is important tool for communication. If you have a budget, you can communicate with stakeholders what budget we have for next 12 months. You can call your team members, internal, external, and then you can set it. Your goals, expectation according to the budget toward the common goal. The budget also provides a common language and discussing the performance, enable different departments working together effectively that help to achieve the objective. Lastly, budget help organization to anticipate and respond to changes in the business environment. By regular reviewing their budget, updating their forecast, the company can quickly adjust their plan and respond new opportunities or threats. In conclusion, budget are the critical management accounting tool that help organization to plan, control, coordinate resources effectively. By setting the clear target, monitoring performance, facilitating communication, enabling flexibility, and budget provide the framework for achieving organizational success. That's crucial. So define the budget. So what is, we already discussed about budget is a formalized statement. It's help organization to achieve. There are the number of financial plan outline the expected income and expenditure. A budget is a quantitative mean numbers. We can say £10, £20, £100, £1,000 for different elements where we can operational areas. So you can make it marketing budget, HR budget. These are non-functional or operational areas in the organization or departments. So budget is the detailed plan, identify how the organization tend to allocate the resources according to. It can be budget can be allocated according to areas, according to the activities, according to different. So like if you have a big area you look after, you need more budget for maintenance or cleaning. So that can be allocated accordingly. That help to achieve the organization objective. So budget organization budget for the several reason, including planning. Budget is a financial plan where we are, how we can use the resources, where we need to cut, where we need to invest more money. Control is a corrective action, as we mentioned earlier. It's meaning that, and we can look around actual, and we budget sale, but actual sale is a higher than the budgeted, which is in our favor. Always look around. The budget is in your favor. Budget is adverse, is not in your favor. So favorable and unfavorable budget. Coordination, the budget also help to coordinate. Budget help to motivate people. If you stay within a budget and you perform well, you can get the performance related pay. You're excellent manager. You plan the activities and you achieve that retired desired goal in within the budget. So we can motivate budget, motivate employees as well. Forecasting organization help. At the moment in the UK, inflation is around 4%, so it's mean our budget need more. Our national minimum wage is going up from £10.40 to £11.44. So we can forecast next year we need more salary, where the money will come from, and where the budget, and we can address, the budget. If we don't do budget, also help, to avail the opportunity and tackle the threats. So stages of the budget process typically involve the several stages in the organization, depend upon the size. Strategic planning, which is mean the long-term budget, strategic where you want to see your organization in a few years' time. Master budget is overall of budget, like whole country budget is a master budget, whole company budget is a master budget. Then you have a departmental budget, you have a province budget, or you have a local areas budget, like England, Scotland, and Wales and Ireland. These are their local budget, and we can look around the functions too as a whole country in a same way organization, marketing, production and administration. These are functional area and budget. Coordination and negotiation. So budget, when you're making budget, it's good to be coordinate and negotiate with all the stakeholders because they not go on strike and create more problem for organization. Of course, budget need to be approval from, it can be upward, downward approach, which we can use, and then we can help, to function the organization and management properly. Implementation, yes, involve the putting approved budget into action and monitor the performance against the budget, like, building house and whatever activity you're doing. Evaluation, this involve review the budgeting process, performance against the budget, and identify if we need to improve any areas. So master budget, which we said, overall budget of the organization is to include function and typically prepared annually basis. This survey of the masters. At the word masters, it can be all the revenue expenses, it can be any activities, it can be financial and cash flow. Functional budget is depend detailed budget each functional area, such as marketing, such as uh, administration, HR, IT budget. So these are the budget is known as functional. In summary, the budgeting process involves several stages. We said planning, preparation, master budget, coordination, required negotiation, approval, implementation, evaluation, the master budget, overall budget, organization, functional areas for each functional area. Okay, when we're making the budget, we'll carry on taking the corrective action. Corrective action is an essential component of the budget, which help, organization to identify the areas, measure the actual performance with the budgeted performance, identify where the area of improvement. There are the several corrective action which we can revise your budget according to if we have a variance there a lot, cut the cost and improve or reallocate the resources. Maybe you're closing the department, still you're giving the budget. Adjust the operation if the performance falls below the expectation due to the operational issues. Organization maybe need to adjust the operation, like we make the people downsizing. It means the right sizing as well in organization to adjust the budget. This could involve the changing process, recognizing, reorganizing the team, and investing the new equipment. Any question, please? If you have, please, you can ask.
Okay.
Okay, investing in training and development. We can make the budget, what's the skills required, what the skills shortage. Like, Nokia, they cut the budget on research and development. Ultimately, they not produce the innovative mobile, and we can't Nokia stay behind. So we need to be upskilling. We need a budget for training and development and research. We need to change the performance metrics. We can measure it. We can look around, better reflect the performance according to the environment, review the incentive and reward. Yes, if someone is performing better, if you don't give the right reward system and not engaging, ultimately they will be demotivated, and demotivated staff not going to achieve the goals and objective of the organization. So in summary, corrective action is a critical part of budgeting process to help organization to identify the areas where we need to adjust the plan and allocate the resource. Okay, taking appropriate corrective action, it's help organization to improve the performance. It's help allocate the resources and make the right decision. Okay, let's look the budget preparation and budgetary control. So we have the budget here, sales. We budgeted 500,000, but actually the sales we have a 480,000. So actual sale is less than the budgeted sale. So sale mean income. If you have a higher income than budgeted in your favor, if you have a less income than your budgeted, you have a loss. So it's variance. So variance is a here is a negative, which is mean unfavorable.
Sorry,
Unfavorable.
didn't get variance.
Yes. So variance is the difference between budgeted and actual. So we budget sales, it should be 500,000, but actually we sold the goods 480,000. So there is a variance of 20,000. So this is unfavorable because sales should be higher than the budgeted. Yes.
Okay.
Okay. Cost of sale, we budgeted 300,000 will be cost us. Actually cost of 310,000. So now this 10,000 is our adverse variance because actually we spend it more than the budgeted. Any question?
Didn't get it.
Okay, 310 minus 300,000. Yes.
Okay.
So we said we purchased the good that cost us 300,000. When we went into the market, the goods we sold it, we purchased for 310,000. So we spent 10,000 more. Yes.
Yeah. Okay.
Okay. Then we have gross profit 200,000. We said estimate actually is 170,000. Why 30,000 is short? Because the reason is 10,000 is our cost of sales went up, 20,000 is our sales went down, and overall we worse off by 30,000. Okay, so we budget our gross profit should be 200,000, but actual profit we have 170,000. So there is a 30,000 shortfall. But where this came from shortfall, due to the sale was less and expenditures were more, and ultimately this accumulate £30,000 worth of the loss we have than the budgeted actual are less our profit by 30,000. Operating operating expenses, which is mean running expenses, 100,000 we estimate, but we spend it 105,000. So there is a 5,000 more. So then we can look around what is the net income. Net income is 100,000 as a budgeted. Actually 65,000. Why? There is a short of 35,000. 30,000 came from here gross and 5,000 further. So total is 35,000. Okay, they did not put the sign right, so please ignore it. Should be negative. Okay, so in this example, the table shows the budgeted amount for each categories as well as the actual amount. So as we mentioned, there is a difference. Yeah. So there is a shortfall of, so that's they explain in, and we can explore about the reasons. Yes. Maybe they not advertise properly, that's why. Maybe the customer or the credit crunch in the country, that's why the sale went down. Maybe the expenditure higher due to the inflation, like I mentioned, the rent or the rates or the national minimum wage. So ultimately they said, there is a 35,000 pound variance we have as shown in the facts and figures, and we can interpret. So what we can do, budget play a crucial role by controlling the activities, important management tools of the organization, which we can is provide the roadmap so we can take the corrective action. Important budget and control the planning and controlling activities help to. We need to be more focused the planning. We need to find the new supply to reduce the cost of sales. We need to increase the sales by advertising or giving them more incentive. That's, which we can take the corrective action, ultimately help, to achieve the common goals. Resource allocation, we need to be allocate the resources, 3M, three type of resources every business requires. We need manpower, human being implies we need to allocate accordingly how much staff required each departments according to area, according to activities. We can think about how much money required them, and we can think about how much other asset required. So we can make the decision and we can allocate the resources accordingly. We can look around the performance, like we seen the sales went down, cost of sales went up, operating expenses went up, ultimately profit went down. So that's not it. We have to take the corrective action. We should ask the managers, we arrange the meeting. If the budget wasn't realistic, we should make it realistic budget. Yes, motivation. Okay, budget can be used to motivate, but it can demotivate employees as well if they're not budget not realistic within line with the. So employees are given the specific target to work towards and likely to motivated engage if they achieve within the target. Okay. Role of budget and control, establish the standard, budget provide the benchmark against the actual performance. So we can set about standards like how many hours required to produce one unit. So we can say how much cost it. So it's help to find the variance correctly, baseline performance, monitor the performance, but it help monitor the performance, regular comparing actual, which the budget and that's managers carry on taking the corrective action, and budget provide the value in taking the corrective. Then limitation of the budget. Budget sometimes is a time consuming. If you're looking where the 10 pounds gone, maybe you required 2 hours, 5 hours to find it where 10 pounds gone. The 5 hour cost £11 44 pence per hour is the national. If you're spending that costs you more, then you just, sometimes it's a waste of time and ultimately increase the cost. Lack of flexibility. Sometimes budget is not inflexible. It's not allow you to change according to the environment. Like NHS doctor short A&E in the UK, it's a huge waiting time. So because the budget is not being flexed accordingly. So limited information, budget provides sometimes limited amount of information, not complete picture of the performance. Inaccuracy in the budget. Sometimes budget is estimate can be wrong, and ultimately this reflect, and this can instead of motivate, this can be demotivate from. So what we can look around in summary, the budget are the important tools. Control activities provide achieving organization success, while the several advantages are the planning, coordination, allocation, but there are the limitation of the budget. It can be inaccuracy, it can be balance benefit and limitation. Make informed decisions and make sure your budget is accurate. Okay, then we can look around different types of budget and their examples. So budget can be volume based budget. What is meant by volume? Volume is means sales, like how many thousand units. So we can say a budget can be designed to remain unchanged regardless of the level of production. We can say, come on, you have 10,000 employees, you have a 5,000 doctors. Doesn't matter, the population is growing, more people is using NHS services. We're not increasing more doctors and nurses. Ultimately, what will be happen? There will be shortage of the doctor and nurses, and what will be happen? Waiting time will increase. So restaurant, the budget 5,000 per month rent regardless of the number of customer itself. Okay, sales of the production volume budget is a flex. A budget can be adjust the changes in the sale volume if you produce more. So 500 per unit of the direct material, adjust the budget 550 per unit, sale volume increase. If the sale volume increase, the budget can be increased accordingly. Okay, then activity and the expenses, zero-based budget. What is a zero-based? Like a new business, you don't have a facts and figures the previous year, you start everything from zero. Every year you estimate again how much money required on labor, how much goods will buy during the year, how much we need to buy different stuff, in a business. So that's assuming existing activity and expenditure. A university, the budget for each department from the scratch each year, rather than automatically we look the last year, we can say 10% flex. No, we're not doing it. We can estimate every year from the scratch. That's a zero base. Okay, incremental budget, which is a prior year budget, we can say 10% inflation, 10% budget you can increase. That's your incremental budget. Whatever the money you kept for the last year, you can increase by 10%. Time period budget is a rolling budget, so you can roll over whatever the last quarter was, or you can do a bit changes within it, and then you can roll over the budget for the next year. You're not looking what the how much business is grown up. So sometimes it can create a more variance as well. Activity and resource consumption budget is also known as activity budget. This is most important approach which is using many businesses nowadays. If your activities, your deliveries increase, many deliveries, you're saying, come on, I'm making policies, we deliver next day. This means you have to send many time delivery lorries. So that is cost you more and that you need a require more budget. Hospital, that budget, the number of procedures performed in each department, yes, number of operation, number of tests, rather than the allocating the fixed budget for each department. If those increase, then we need to increase the budget. Value proposition budget, a budget can be in line with the resource with the value proposition organization, ensuring the allocate your activities and create most value for the customer. If the customer happy, you'll get more money. So a software company is the budget, the research and development and the customer support, marketing and development and launch new software. They need more money. Any question? These budget. These are called different types of budget. It can be fixed budget that stay the same, flex budget, zero-based budget, incremental budget, rolling budget, activity-based and value proposition. Any questions?
No question.
Then we have, please, it's good video that will help you to calculate the budget and it's good to watch in your time. Okay, that's we have again variance which we can use the spreadsheet. So we can write the sales, what is actual as we discussed in the previously, and we can find the variance. And then each variance we can find the reason. The variance due to the lower than the expected sale volume, which may be attributed to decline the demand of the product. The variance is the cost because the higher expected cost, the raw material and the labor, ultimately the cost of sales that went up. Okay, we need to renegotiate with the supplier or we find the new supplier, the cheaper supply. Ultimately, this cost can come down. The variance primary is due to the negative sales and the cost of sales, which we said earlier is a 30,000. Okay, then we can look at our operating expenses increase and we need to look around the cost went up. Ultimately, we need to find how we can reduce it. We need more efficiencies. We need maybe using technology that expenditures should come down. Net income we have, but actually the budget and actual expenditures because all our variance we have adverse and these adverse variances leads to and thus we need to improve our income to make our budget more or we need to redesign our budget. So then we have all the explanation earlier we did in the task and we need to be fine there because overall we have 35,000 variance primary and that's each the point we can do the interpretation of the figure. Okay, that's always good to be what are the reasons. Okay, step of cash budget. What is the cash budget? Cash budget is the lifeblood for any business. So this is the most important budget because of all other budget. So your first budget, any budget you make is based on the sale forecast. If you're expecting the sale will go up, the budget need to be increased accordingly. That's the most important factor which we need to. If your sales is not increasing, then of course, we need to be look around. Okay, so first thing when you're making the cash budget, determine open balance, how much balance you have at the start of the business or start of the period. Let's say you kept 10,000 estimated cash inflow. How much money will be inflow? Money will come. How much money will make outflow? Money will go. So let's say we have a sale. Let's assume it can be your credit sale and you have a policy when you sell it, you can receive in the same month or the next month or within, 10%, 20% and so. Loan you have to pay back, you have the investment, you have total cash inflow. These are all, let's assume these are your cash flows. Then you look around the estimated outflow, we expecting grants, salaries, inventory, stock, other expenses, and this will be. So 75 minus 60, there is a 15,000 is a favorable your cash balance. So we can look around, determine the closing balance of the cash. We can look around what we have, balance brought forward, how much inflow we had, the money coming in, and how much is the outflow. So 85,000 you have because 10 balance start, 75 will come. That's 85. 85 minus 60 is a 25,000 is your closing balance. So we can look around the closing balance if we purchase, and we can use the sheets to prepare. In Excel, we've been given the sheet where we can create, the budget. So it's good to be what we can do. We can watch these. Yes. So that's, is we can, for the sake of, but not uh, use for the reference purposes. And I can give you separate template for the budget in, and that's we can use it for assignment. Yes. So in Excel, you can click, you can put the amounts, you can create your budget by can using the formula in Excel. This is a separate sheet, and I can go through with you in the next, during the assignment discussion, and show you and give you the Excel template by using the formula that can be make the budget. Okay, that's one. And then within that, if you scroll down, so please, we can make budget, yes. So you've been given HSBC, they always, giving the template as a bank to help, businesses to make the budget. Okay, so we can make the budget. Let's say, you're preparing the budget for using the spreadsheet. You have a template, you can put how many sales will be, how much payment you will do, make payment to customer, how much money you will receive. So how much will be inflows, so cash inflow each month, total cash inflows, yes, and how much. So 20,000 customer payment, 15.5 lakh, 5 will get loan. So we can look around all this. So total inflow, sales revenue, we have 20, 15,000 customer will pay us, 5,000 will get the loan. So total inflow is 20,000. Yes. So we can look around what is the outflows. We can look around how much money will be outflows, 17,000. So net cash flow is 3,000. So beginning balance, we have 10,000 plus 3,000 is 13,000. So that's all, the way. So this month ending balance, the next month will be opening balance. Can you see here? 13,000, which I will carry on doing. So we can carry on putting the figures and we can create it. So in this example, we can look around the cash is down by the month, and we can separate column in the January, February, and March. We can look around how much is incoming, how much is outgoing. We can look around inventories, stock, purchases. When we're making payments, we can think about how we can negotiate with the supplier to take the longer time to pay off the cash balance more. If we have a shortfall, we can look the bank overdraft facilities. So that's help. Then we have a discuss the benefit and the limitation about the budget. So benefit of the budget and the budget planning is provide the framework of the decision making. We can make the decision. We can allocate the resource. It's facilitate communication as we discussed it previously with the various stakeholders. It help to identify the problem if we have a short of the budget, shortfall. If variance we have, we can take the corrective action. Provide the benchmark. Benchmark is means standard KPI, like spend 10, but actually we spend 20. We can enhance the accountability. We can enhance who is responsible for. We don't need, we not negotiate with the supplier. That's why the variance is there. What are the reasons? Yes, you can find it. Limitation of the budget, limited flexibility is something you can't do it. Only one supplier supply the goods. You have to negotiate only with one. Sometimes budget can be time consuming. Budget can be potential for the gaming. You have to measure the risk. You have to sometimes you can annoyed people if you're not making the payment on time, may not reflect the changing priorities, because the priorities of the organization or environment or the circumstances carry on people maybe not buying the things. That's why the sale is down due to the COVID, due to the environment. due to the inflation. Hinder innovation. Yes, sometimes we don't have the money, we can't really innovate like Nokia closed many research and development center in the world. In summary, the budget and the budgetary control and the planning is to help, for the company, all providing the framework, making, facilitating, communicating, and accountability. However, there are the limitation of the budget we can create, by understanding the benefit and the limitation. It's help, the budget which we can, and it's help to be good to be have a budget and keep in mind the limitation. Then you have a merit criteria, corrective action. What corrective action can be taken as a company in the light of the variance? Our spending, sometime organization, our spending, they have to make sure they stay within the parameter, within the revenue stream, not spend too much. Cash shortfall, we need to think about where the cash we can generate. Cash is a liability. We can maybe less stock because the money is tied in the inventory stock. Inaccurate budget, sometime inaccurate budget or estimate wrong, that can be, we need to be revised it. We need to carry on training every year, keeping in view of the estimate for the future and looking the environment. Variance analysis, always good tools to look around and revise, the variance and implement and improve the performance. Like, why the sale and advertising. Maybe we use the social media to increase the sales, like we see in the variance in the sales. Departmental performance, we regular have a departmental meeting, looking the variance, looking the corrective action which we can take it to help, to improve. So these, the details we need to be regular review that help, to take the corrective action. Then distinction criteria solution, their impact on the organization, improve the revenue allocation. Revenue mean the sales, yes, allocate resources accordingly, look around different department, different product, their sale, and you can make the decision either to cut or improve, and you draw the clearly framework. Enhance the cost control, yes, you have to look around the fixed cost, variable cost, different costs. Our spending should be underspending, not overspending. If you're too much spending, look at what's happening in the revenue, always look across departmental performance, better decision making. If you have a right information, data information, and knowledge, that's which we can look around. That will help to make the right decision and improve the performance. Improve accountability, yeah. So accountability, who's responsible, who gave the budget, we can track the actual result. And then the budget, if there is the variance there, we need to investigate those, and we need to look around what are the reasons. Is the lack of information, lack of training, lack of, greater transparency. Budget help, greater transparency. We can look around what budget being given, what actually performance we have. We can look around the trade, the stakeholder trust, and their communication. We need to, that we can improve. We said earlier, budget will help, to improve the communication. In summary, the budgetary control solution is a critical ensure the efficient, effective deployment of the resources within by improving the resource allocation, enhance the cost control, facilitate the better decision, promote the accountability, increase the transparency step in the organization to achieve objective and the long-term success. So that's, all about the budgeting. We discuss about different types of budget. Budget, when you make any budget, first of all, you need to understand the sale forecast, and then we need to make the budget accordingly. So that's all from my end. Any question, please? Hello.
No, no questions.
Okay, so thanks for attending today's lesson. So today's lesson was about budget. Budget is a financial plan. We discussed variance. Variance is the difference between budgeted and actual. And then we discuss about types of budget, zero-based budget. We discuss about flex budget, fixed budget. We discuss about master budget. We discuss activity-based budget. And we discuss about rolling budget. So these are different types of budget. And we discuss, the cash budget is the most crucial incoming and outgoing of the cash in the business. And we discuss, why budget are crucial. We discuss merit criteria and discussion as well. Thanks for attending, and I will speak you during next week when we'll do assignment discussion. And have a lovely week.
Okay, thank you. Bye-bye.
Thank you. Bye-bye.